What's up? Welcome to Blockchain Tech and Finance News. If you're on the YouTube side, please do subscribe, turn on the bell notifications. I'm streaming here on Twitch, among a variety of other platforms as well. And you can recatch all of these recap episodes on the YouTube side and all of the articles in the description box on the YouTube side on the recaps in Blockchain Tech and Finance News playlist on my channel, KinToshi. So, otherwise, on the first piece of news, I've got a variety, about 9 different articles I'm going to read from today. I'm not going to be discussing them too much. I'm just going to be reading from them because I thought they were very interesting pieces of news to go read from. So, without further ado, let's go right on into it after this transition. Cheers. All right, so for this first article, I have here the SEC's Gensler doesn't see cryptocurrencies lasting long. So, regulator says history of wildcat banking in U.S. shows limited viability for private forms of money. This is from the Wall Street Journal and from writer Paul Kiernan from Wall Street Journal. So in Washington, let's see. Going to tell me, why do I always do this with the Wall Street Journal? Let me see this. We're going to find this article elsewhere because they always want me to subscribe to the Wall Street Journal. I don't think, was it Trump who doesn't like Fox or something? Fox and Friends, whatever it is. I don't know. Anyways, let's read this article. This is ported through from Paul Kiernan from the Wall Street Journal over into Fox News. SEC's Gensler doesn't see cryptocurrencies lasting long. The regulator says histories of wildcat banking in U.S. shows limited viability of private forms of money. So, Security and Exchange Commission's chair Gary Gensler said Tuesday he doesn't see much long-term viability for cryptocurrencies, underscoring the importance of protecting investors in the market and bringing it under regulatory oversight. SEC chair warns cryptocurrency industry won't reach potential staying outside our laws. Mr. Gensler likened the thousands of cryptocurrencies in existence to the so-called wildcat banking era that took hold in the U.S. from 1837 until 1863 in the absence of federal bank regulation before President Abraham Lincoln created the Office of Controller of the Currency Bank. Banks issued their own currencies, which they sometimes refused to redeem for their purported value in gold or silver. I don't think there's long-term viability for 5,000 or 6,000 private forms of money, Mr. Gensler said in a virtual event hosted by the Washington Post. So in the meantime, I think it's worthwhile to have an investor protection regime placed around this. And I agree with him. Mr. Gensler, who took office in April previously, I'm not saying I agree with him that all these cryptocurrencies are going to be lasting, but I agree with him that, we're a good, transparent regulatory framework, right? Mr. Gensler took office in April, previously taught a class in cryptocurrency at the Massachusetts Institute of Technology, raising hopes among some industry participants that he would be a friendly regulator. Instead, he has repeatedly likened the crypto market to the Wild West and urged crypto trading and lending platforms to register with the SEC, saying that they're likely offering underwriters their securities in violation of federal law. I guess we could read. I guess we could try and watch this.
With respect to cryptocurrency in particular, he gave a laundry list of things that he would like to go ahead and regulate. The issuance of tokens, trading in exchanges, lending against crypto assets, and so forth. And so, therefore, he simply laid out a bunch of topics. The only thing of substance.
Oh, check out this smarter loan thing. All right, no, not really.
Charlie Gasparino's been looking at things because Charlie, just today we learned that Turkey has banned cryptocurrency in general until they can sort this out. Just as a number of states, the Florida, Miami commissioner, looking at using that as a way residents can pay their taxes. So it comes and goes. But where's all this going in your eyes?
Well, regulation. When you talk to crypto investors, and I spent some time doing that, regulation is the one thing that can knock this price down. And even if crypto and Bitcoin and these other Ethereum, they were down by half, they would still be up from where they were. It'd still be an amazing ride, but it would be down from where a lot of people put their money in, which is now. So regulation is something that crypto investors have to look. And after Turkey, this has been reported, but we'll say it again. India is looking for a ban.
we're not going to watch that whole 7-minute, but you get the gist. Is that regulatory framework and the effects on cryptocurrency. In that regards, I did not mean to close that article. Here, let's do this. I meant to close just the video. There we go. Let's go back. Take it back a step. So on Tuesday, he took aim at stablecoins, a fast-growing segment of the crypto market that has attracted increased scrutiny from regulators in recent months. These tokens, including Tether, USD Coin, and Binance USD, are pegged to a 1-to-1 ratio to the dollar and say they are backed by high-quality assets. They are used primarily to trade other cryptocurrencies. We've got a lot of casinos here in the Wild West, and a poker chip in these stable coins at the casino gaming tables, Mr. Gensler said. He said stable coins often have aspects of both SEC-regulated investment contracts and banking products, but that federal bank regulators don't have all the authorities they need to supervise them. In separate remarks, Tuesday, acting controller of the currency, Michael Hisu, said Tuesday that the crypto industry is on a path that resembles that of credit derivatives ahead of the 2008 financial crisis. He expressed doubt that cryptocurrency is achieving its goal of promoting financial inclusion and criticized crypto instruments that promise steady yields to investors for failing to explain how those returns are generated. I have seen one fool's gold rush from up close in the lead up to 2008 financial crisis. He said in the remarks to the Blockchain Association, a crypto lobbying group, it feels like we may be on the cusp of another with cryptocurrencies and decentralized finance. So there's more on that article. I will put the excuse me. I will put the Wall Street. I will put the Wall Street Journal article up in the description box. Excuse me. Let me clear my throat. Sorry about that. So I will put the description to the Wall Street Journal article. So if you are subscribed to the Wall Street Journal, you can read through it at your own leisure, the full entire article. Or if you're interested in reading it, you can, I guess, subscribe to the Wall Street Journal and check it out. I'm typically not subscribed to the Wall Street Journal, but hey, maybe I will be. So in other regards, so that's that for that. I'm going to grab up the next article here. And again, if you're on the YouTube side, please do subscribe, turn on the bell notifications here to Blockchain Tech and Finance News. We try to do this every day at best, except Tuesdays. I don't think I'll be doing the streaming news on Tuesdays unless I find something very interesting to purportedly do. Most definitely. So I'm going to go right into the transition. We're going to read this next article here. I found interesting. Let's go. All right, so this one I found interesting. This is on through NPR. This is from heard on All Things Considered. So if you listen to NPR, this is from Tim Mack. Yep, Tim Mack. TikTokers are trading stocks by copying what members of Congress do. So a community of young investors on TikTok, including CEO Watchlist, Quick Trades, and iRise app, are using House Speaker Nancy Pelosi's stock trading disclosures as inspiration of where to invest themselves. One user called Pelosi the market's biggest whale, while another called her queen of investing. Young investors have a new strategy, watching financial disclosures of sitting members of Congress for stock tips. Among a certain community of individual investors on TikTok, House Speaker Nancy Pelosi's stock trading disclosures are a treasure trove. Shouts out to Nancy Pelosi, the stock market's biggest whale, said the user CEO Watchlist. Another said, "I've come to the conclusion that Nancy Pelosi is a psychic," while adding that she is the queen of investing. She knew, declared Chris Josephs, analyzing a particular trade in Pelosi's financial disclosures, and you would have known if you had followed her portfolio. Last year, Josephs noticed that the trades actually made by Pelosi's investor husband and merely were actually made by Pelosi's investor husband and merely disclosed by the speaker were performing well. Josephs is the co-founder of a company called Iris, which shows other people's stock trades. In the past year and a half, he has been taking advantage of a law called the Stock Act, which requires lawmakers to disclose stock trades and those of their spouses within 45 days. Now, on Joseph's social investing platform, you can get a push notification every time Pelosi's stock trading disclosures are released. He is personally investing when he sees which stocks are picked. "I'm at the point where if you can't beat him, join him," Josephs told NPR, adding that if he sees trades on her disclosure, "I typically do buy the next the next one she does. I typically do buy the next one she does. I'm going to buy." Where'd this go? A Pelosi spokesperson said that she does not personally own any stocks and that the transactions are made by her husband. The speaker has no prior knowledge of subsequent involvement in any transactions, said the spokesperson. Still, Josephs views trades by federal lawmakers as smart money, worth following, and plans to track a large variety of politicians. We don't want this to be left versus right, a left versus right thing. We really don't care. We just want to make money, he said. Pelosi is hardly the only lawmaker making these stock disclosures. So far this year, Senate and House members have filed more than 4,000 financial trading disclosures, which at least $315 million of stocks and bonds bought or sold. That's according to Tim Carambat, who in 2020 created and now maintains two public databases of lawmaker financial transactions, House Stock Watcher and Senate Stock Watcher. He says there is a significant following for his work. I knocked out a very, very simple version of the project in like a couple hours, and I posted it actually to Reddit, where it gained some significant traction and people showed a lot of interest to it, Carambat said. Dinesh Hasija is an assistant professor for strategic management at Augusta University in Georgia, has been studying whether the market moves based on congressional disclosures. His ongoing research suggests that it does. Investors perceive that senators may have insider information, he says, and we see abnormal positive returns when there's a disclosure by a senator. In other words, his research shows that after the disclosures are published, there's a bump in the price of stocks bought by lawmakers. At least one financial services consultant, Matthew, is planning to step up a financial instrument that automatically tracks congressional stock picks because, in his view, lawmakers are probably privy to more information than just the general public. Both investors and government watchdogs are interested in these trades because of the possibility that lawmakers could use the private information they obtain through their jobs for money-making investment decisions. The situation is that the public has lost so much trust in government that they think the stock trades of members are based on corruption, and that following that corruption could benefit them. We have a significant problem, said Kedrick Payne, Senior Director of Ethics at the Campaign Legal Center. A surge of interest following congressional financial disclosures came near the beginning of the COVID-19 pandemic, when a flurry of reports indicated that lawmakers sold their stocks right before the financial crash. NPR reported how Senate Intelligence Committee Chairman Richard Burr privately warned a small group of well-connected constituents in February 2020 about the dire effects of the coming pandemic. He sold up to $1.72 million worth of personal stocks on a single day that same month. A bipartisan group of senators also came under suspicion, including Senator Deanne Feinstein, James Inhofe, Kelly Loeffler. After investigation by federal law enforcement, none were charged with insider trading, a very difficult charge to make against a sitting lawmaker. Congressman Raja Krishnamurthy, a Democrat from Illinois, is part of a bipartisan group of House and Senate members who have introduced legislation banning lawmakers from owning individual stocks. He has run up against a lot of opposition in the idea. As I understand it, one of the perks of being a member of Congress, especially from the late 1800s, was to be able to make a trade was to be able to make trade was to be able to trade on insider information. That was the perk of being in Congress, and that has got to come to an end. Polling shows that there is a wide support for enacting prohibition. According to a survey done this year by Data for Progress, 67% of Americans believe federal lawmakers should not own individual stocks. There's a deep cynicism that forms a foundation of a trading strategy based on mimicking the stock picks of lawmakers and their spouse. And their spouse is the notion that politicians are corrupt and that you can't trust them not to engage in insider trading. So if the information is public, you might as well trade what they're trading. But despite all this skepticism about politicians and their ethical standards, the evidence does not show that members of Congress make great stock pickers. While a 2004 paper found that senators generally outperform the market, more recent academic studies in 2013 over the past few years have suggested lawmakers are not good at picking stocks. Those papers have found that in fact the trades made by senators have underperformed, as Sija said. This means that if you ever take a stock tip from a lawmaker, cynicism aside, it might not be a very good trade. So, albeit maybe the data's there, maybe it's not there. We'll see. But I found that article interesting in the regards of TikTokers following Nancy Pelosi's husband's stock picks. Let's go. Let's go into the next bits of news here. If you're on the YouTube side, please do subscribe, turn on the bell notifications to blockchain, tech, and finance news. While I grab this next article up here, I'll be doing this at best every day, and I'll be having this article links in the description box below on the recaps, so you can read at your leisure on your own as well. Let's go into this transition here. All right, so this next article is from Barron's. This is a stock pick about a stock pick. Lucid stock is racing higher, for potential reasons for the mammoth gain. So Lucid is a smart car motor startup. Electric vehicle investing can be confusing, but it is never dull. Old line businesses with lots of experience making cars are trying to morph into growth companies that have never made anything. Get multi-billion-dollar valuations from investors betting the startups will take market share from their decades-old counterparts. And then there are the daily stock news. Okay, that's a little bit confusing. Oh, it's not gonna let me read this. Barron's. I gotta subscribe to Barron's. Let me see this. Let me see if I can find a different article port for this one as well. If you have Barron's, I guess you could read that, but. Let's go into, I don't know if I'm going to be able to find this. Let's see. Opera News. Let's see if they got the full article here. Read the full story. It's going to let me, nope. It's going to take me back over to Barron's. I saw something similar. Let's see if we can find something similar over on So, what's going on with Lucid Shares today? This is a day ago. Yahoo Finance. Yeah, here we go. Let's check this article out. What's going on with Lucid Shares today? So let's go over to Yahoo from Adam Eckert. So Lucid Group Inc. NASDAQ LCID is trading higher Tuesday, possibly in anticipation of the company's production preview week, which is set to begin on September 27th. So I will have this article from Yahoo in the description. So we're going to read from this one. Lucid said its production preview week will entail a series of events during which the company will open the doors in an advanced manufacturing plant AMP1 factory to members of the media, financial communities, policymakers, and a select group of customers. According to Lucid, guests will be able to observe the production process for the Lucid Air, take a deep dive into Lucid's advanced EV technology with leading engineers. Lucid is a technology and automotive company that develops next-generation electric vehicle technologies. So Lucid Motors, I guess, is going to be making a smart car here in main regards. So that's a little bit there. They got some things going on inside of there. So if you want to follow LCID, again, I'm not giving financial advice. I'm not a financial advisor. Do your own research. Take caution in any markets, whether it's crypto, blockchain, stocks, finance, whatever it is. Do your own research and due diligence carefully, most definitely. So that's an article here. I will put that in here. I'll put the Barron's one in there as well. So if you're subscribed to Barron's, you can read the full thing about what's going on with LCID, and probably there's more information on there. But in main regards, their share cost, they're saying speculation-wise, will be having growth as a smart car industry provider of smart cars. So let's go right on into the next article here. Trying to grab full articles here. I think I'm pretty sure the rest of them are full articles. So again, if you're on the YouTube side, please do subscribe, turn on bell notifications here to Blockchain Tech and Finance News. We're going to go into this intermission. So in this next article we have right here, this is from Yahoo Finance as well. Bitcoin crashed to $5,400 in error on network backed by quants. So why the just trying to find that word. Why the drop back in Bitcoin price recently? Maybe it has something to do with this. I'm not exactly sure. But from Bloomberg, a cryptocurrency data network run by some of Wall Street's biggest players show a roughly 90% plunge in Bitcoin on Monday, a glitch that didn't show up on other platforms. So aka like cryptocurrency exchanges like Coinbase, Gemini, etc. did not see this because this was a glitch more in the Wall Street players. Maybe something to do with the GBTC stock. Let's see. The platform called Pith is heralded by its supporters an industrial-grade source for pricing information on assets like stocks and cryptocurrencies. Its contributors include finance giants like Jump Trading Group, DRW, and FTX. So on Monday, it briefly reported Bitcoin's price as $5,402. Engineers are continuing to investigate the cause. In a full report in the works, Pith tweeted Monday morning. There have been no further tweets from Pith on this matter. It's an eye-catching error for a system that gets information from some of the top, most sophisticated traders. For something like this to succeed, the data needs to be something people can rely on. Joe Moloso, co-president and co-chief operating officer of Pith contributor Virtue Financial Inc. said in a June interview, things have returned to normal Tuesday. Bitcoin's price was recently given as $41,888, close to prevailing levels. It's the second recent problem. Pith connects to Solana blockchain, which stopped working for more than 17 hours last week. The outage also took down Pith. Why? So it's interesting to me to research more about why they're grabbing data through and how so through Solana blockchain. What the Solana blackout reveals from the fragility of crypto. I mean, it's obviously you could have some like backup APIs with like CoinMarketCap, the likes of that's gathering trade data from multiple exchanges. But hey, let's see what maybe CoinMarketCap's even operating off of a similar data set. Who knows? It's unclear how widespread any troubles caused by the Bitcoin plunge on Pith might have been. The Twitter account for Bonfida, a project built on Solana, said the decline caused a series of liquidation events on the Audacy's protocol BTC perp market, unfortunately working as intended. Audacy's is Bonfida's perpetual futures platform. I have to really look into these anymore, but I found that interesting that there was an error that crashed Bitcoin's $5,400 valuation recently here. Let's grab the next article and keep reading through these. What do we got? Chat here. Yeah, if you're in the chat, please do chat. Say what's up and give shout outs, and I will respond accordingly, most definitely. If you got something you'd like to see covered in blockchain tech and finance news, let me know as well in the comments, in the chats. Otherwise, let's grab this next article here. If you're on the YouTube side, please do subscribe, turn on the bell notifications. Let's go. So next article is the Treasury Department rolls out first ever sanctions against cryptocurrency exchanges. It's from Yahoo News, from Zachary Halasjak. It The Treasury Department punished a Russian cryptocurrency exchange that allegedly helped cybercriminals carry out ransomware attacks. Some 40% of cryptocurrency transactions handled by SUIX were linked to illegal activity. The Treasury Department's Office of Foreign Assets Control said in announcing sanctions against it. The exchange allegedly played a role in at least 8 ransomware attacks. Ransomware and cyber attacks are victimizing businesses small and large across America and are a direct threat to our economy. We will continue to crack down on malicious actors, said Treasury Secretary Janet Yellen. As cybercriminals use increasingly sophisticated methods and technology, we are committed to using the full range of measures, to include sanctions and regulatory tools to disrupt, deter, and prevent ransomware attacks. The sanctions, the first of their kind imposed by Treasury, mean that all property and interest in property of SUIX that are subject to U.S. jurisdictions are now blocked. Additionally, Americans are now generally prohibited from engaging in transactions with the exchange. The United States also provided updated guidance on Tuesday about how companies should respond to ransomware attacks, which involved hackers seizing data and threatening to block access to it unless a ransom is paid. The guidance emphasizes that the U.S. strongly recommends targets of ransomware attacks not to pay out hackers' extortion demands, but it also strongly encourages victims and related companies to report these incidents and to fully cooperate with law enforcement as soon as possible. This year, there have been a spate of ransomware attacks, including attacks against Colonial Pipeline in the spring. Hackers believed to be from the Dark Side hacking group demanded some $4.4 million in Bitcoin to restore the pipeline's operations. The company ended up paying the ransom, and the services was incrementally restored. The FBI then worked to retrieve the stolen funds and recovered 63.7 Bitcoin worth about $2.3 million at the time from a Bitcoin wallet thought to be controlled by the cybercriminals tied to the Russia-based collective, a feat that left some experts stunned and sent the price of Bitcoin downward. Even the fear of increased government involvement and control within the crypto sphere. The price of cryptocurrencies didn't appear to be too rattled by news of the sanctions on Tuesday. Bitcoin was down 1.6% at 43,000. Ethereum was 1.1% lower, and Ripple was up slightly. So that's an article here about Treasury Department rolling out against sanctions against cryptocurrency exchange over in Russia. So that's a good thing to news. It's a good thing to hear, most definitely. That those regulatory frameworks from the Treasury and enactments are definitely taking place against cyber terrorism, most definitely. All right, so with that article, let's go back over here. Please do subscribe, turn on bell notifications, as always, for blockchain tech and finance news. I'm going to go right into this next article here. So this next piece of news is from CNBC in the market section from Maggie Fitzgerald and Kate Rooney. Robinhood to launch cryptocurrency wallets as Bitcoin becomes a bigger part of business. Robinhood is testing crypto wallets with select clients next month to allow investors to send, receive, and move cryptocurrencies in and out of the Robinhood app. In recent months, some users have taken to social media to complain that by using Robinhood, they had exposure to crypto prices, but not actual ownership of these coins themselves. The move comes as cryptocurrency makes up an increasingly large part of Robinhood's revenue. I've even said the same thing. Buying Ethereum or Bitcoin through Robinhood doesn't actually allow you to send Bitcoin to my friend or to pay for something with Bitcoin. Yeah, I can see why Robinhood would definitely make their Robinhood wallet for crypto. Robinhood is debuting a feature that gives traders more control over digital tokens in the latest expansion of the cryptocurrency space. The newly public brokerage is testing crypto wallets with select clients next month. The company announced in a blog post Wednesday the so-called wallet will allow investors to trade, send, and receive digital currencies as well as move them in and out of the Robinhood app. Shares of Robinhood rose 5% on Wednesday. In recent months, that's the Robinhood stock shares. In recent months, some users, particularly Dogecoin traders, have taken to social media to complain that by using Robinhood as their broker, they had exposure to crypto prices, but not actually ownership of the coins themselves. We're not the first to to the market. We've been taking our time to make sure that we build this in a phased approach. Robinhood Chief Product Officer Aparna Pragada told CNBC in a phone interview, "We'll have a few customers come in to iterate on the product, get the customer feedback, and then expand from there," which is rightly so. I mean, it makes sense. Certain clients will begin testing the product, and Robinhood will share their feedback over its blog and Twitter, said Chenna Pragada, who spent 12 years at Google leading product engineering and design teams before joining Robinhood. The rollout will eventually allow clients on a waitlist to join Robinhood's growing crypto brand business. The startup debuted cryptocurrency trading 3 years ago, but it has come increasingly important to the company's top line. More than half of Robinhood's transactions-based revenue last quarter came from cryptocurrency trading. That's up from just 3% a year earlier. The new wallets will let clients consolidate their digital coins into one account. Clients can then trade, send, and receive cryptocurrencies to and from other wallet addresses. Rival Coinbase and Gemini already offer this feature. Bloomberg News first reported Robinhood's plan to roll out this feature in a beta version of the trading app. Bitcoin and other cryptocurrencies have been sharply volatile since Bitcoin reached an all-time high in April, and more concerns about regulation. Cryptocurrencies took a dive alongside the broader market Monday, with Bitcoin ending the day about 7% lower. The slide resurfaced the debate about whether Bitcoin can or should serve as a safe haven asset. In most recent years, Bitcoin has shown to be more of a tendency to dip with the broader markets. Robinhood also said a new feature that allows the setup of recurring crypto investment is live on the app. Clients can reschedule commission-free trade. Okay, I'm not going to read this like I'm like marketing Robinhood, but yeah, you get the main point here is Robinhood is putting out a cryptocurrency wallet that allows you to custody and send and buy and sell and trade and receive cryptocurrencies at your own leisure. Bitcoin, Ethereum, Dogecoin, and the likes. So again, I'll have all these articles in the description box on the recap episodes on YouTube. I have 2 more articles here that are based around NFTs that I found very interesting. So let's go right on into that. Again, if you're on the YouTube side, every time around, please do subscribe, turn on the bell notifications here to blockchain, tech, and finance news. So this article is from BBC News. The NFT-based fantasy football card firm raises $680 million. So on top of this, I have a lead-up article about NFTs as well, a bit in relation to OpenSea and insider trading of NFTs. So I found that article very interesting. But let's start with this one from BBC News. NFT-based football card firm raises $680 million. And I'm trying to find a article writer. All right, we'll see. French firm Sorar, which sells football trading cards in the form of non-fungible token NFTs, has raised $680 million. 498 million euros, I think, pounds, euros. The NFT-based cards are used by fans to create fantasy football teams, which can then play each other. The funding was led by tech investor SoftBank, with ex-England international Rio Ferdinand also putting in money. The NFTs are controversial, with concerns over financial risk and environmental impact. An NFT is a one-of-a-kind digital asset that can be bought and sold like any other piece of property. As with the cryptocurrency, a record of who owns what is stored on a shared ledger known as the blockchain and maintained by thousands of computers around the world. So there's some other things here. Oh, here's this next article right here. OpenSea admits insider trading of NFTs. But we're going to go into that next. Players can buy cards from Sorare at auction, or fans can also auction cards they own to their other players. Sorar, I'm not sure if it's Sorare or Sorar, sorry. So, they claim $150 million worth of cards have been traded on the platform since January. The latest investment puts its value at $4.3 billion. And as NFTs, the cards can be sold on platforms such as OpenSea and Rarible. Sorare says it has partnerships with more than 180 football clubs and has 600,000 registered users. A number of players, including Gerard Pique and France's Antoine Griezmann, also invested into the company. The firm recently announced a deal with Spain's La Liga and told The Telegraph and told the Telegraph it hoped. So I almost said Telegram, but no, told the Telegraph it hoped to have something to announce about the Premier League. So fan crypto. Some journalists, charities, and is it the same article? Or is this a different article? NFT. Okay, let's keep reading. Some journalists, charities, and fan organizations have begun to question if crypto assets and sports mix. So isn't the only business to have deals with clubs featuring crypto-based assets. Clubs such as Barcelona, Juventus, Manchester City, and Paris Saint-Germain have already arrangements with a firm called Socios to sell cryptocurrency-based fan tokens. Sell cryptocurrency-based fan tokens. The firm promotes tokens on its website as a way to influence decisions of your favorite teams, unlock VIP rewards, and access to exclusive promotions, games, and chat in a super fan recognition. But because the tokens can be traded, some fan organizations worry clubs are encouraging speculation in cryptocurrencies. Lead United Supporters Trust, for example, was critical of the club's decision to reach an agreement with Socios, saying fans would be entering a cryptocurrency ecosystem, something which many have very little knowledge of. If football chooses to bring unregulated cryptocurrency into the game, we believe that clubs also need to provide education and guidance on the purpose and risks associated. So, in NFT worries, NFTs are also controversial. Depending on the technology used, maintaining a blockchain requires considerable computing power with a sizable carbon footprint. As in traditional investing, financial impropriety and crime are a risk, but the protections for consumers are generally less robust. There are also concerns about a lack of regulation. Recently, OpenSea, the largest digital collectibles marketplace, revealed an employee used inside knowledge to buy NFTs before they were promoted on the website. CEO Devin Finzer. Well, I mean, that's not like, okay, yeah, that is insider trading, but I mean, we'll read the article next. CEO Devin Finzer said that the incident was incredibly disappointing, and did not represent the team's values. Insider trading, where individuals are use non-public information, public knowledge about a company or financial advantage, and it's illegal in most regulated marketplace. But the NFT market does not have such restrictions, unless the SEC imposes such, and that they need the same restrictions as stock trading, for example. And that was kind of earlier on in our SEC frameworks and stuff like that, discussions. Let's go on to the next article here that ties into about NFTs most definitely. And we'll close out this space for the day. Again, if you're on the YouTube side, please do subscribe, turn on the bell notifications. Here to blockchain, tech, and finance news. All right, so next article is also from the BBC. And it says OpenSea admits insider trading of NFTs it promoted. An employee at OpenSea, the largest digital collectibles marketplace, used insider knowledge to buy NFTs before they were promoted on the website. I doubt they are an employee at this point. NFTs are unique digital tokens attributed to fan art, which have risen in popularity over the past year, with some selling for millions. CEO Devin Finzer said the incident was incredibly disappointing and did not represent the team's values. An independent review has been launched, OpenSea said. In a blog post, Mr. Finzer confirmed an employee purchased items that they knew were set to display on front page before they appeared there publicly. Front page hype spike. Maybe they should stop doing that then. NFTs are bought using crypto. Unless it's like an ad. Some company paid an ad to market their NFTs or something. I'm not sure. NFTs are bought using cryptocurrency, most commonly Ethereum, ETH, and stored on a permanent digital ledger called the blockchain, where every transaction is logged and made publicly available. The crypto community on Twitter used these records to expose the activity through a series of screenshots and transactions. One user, Zuwu TV, accused Nate Chastain, OpenSea's head of product, of selling the featured NFTs shortly after the front page hype spike for profits. OpenSea did not name Mr. Chastain and did not immediately respond to BBC's request for a comment. So here's a Twitter post. 2 minutes later, wallet A sends 5 ETH to wallet B. Here on the transaction, here's the transaction in question on Etherscan, the blockchain explorer, etherscan.io for Ethereum's blockchain. About 8 minutes later, wallet B buys 4 pieces from the Daily Dust collection, one in particular for 0.25 ETH, named Spectrum for Ramification Theory. And the one work called Spectrum for Ramification Theory was bought for 0.25 ETH and sold for 1.5 ETH just 20 minutes later, after it featured on OpenSea's homepage. Insider trading, where individuals, so I already said that part. New policies. OpenSea said it was implementing new policies which prevent team members from using confidential information to purchase or sell any NFTs, whether available on the OpenSea platform or not. It's jaw-dropping that OpenSea is only now making a rule that staff shouldn't trade against their own customers. Wow, gee. Yeah, that is kind of surprising. So David Gerard, author of Attack of the 50-foot blockchain. This is a worked example of the need for regulation in the cryptocurrency world and should be phrased so as to include NFT markets. And I agree with that statement, most definitely. It also shows that if you're going to do something that might be questionable, then it's probably unwise to do it on a permanent public blockchain that shows all transactions. Yeah, I agree there as well. So that's a bit there. So this is what I have in the articles. Again, I'll be having all of these in the description box below on the YouTube side on these episode recaps. So please do subscribe, turn on bell notifications here to blockchain tech and finance news. I'll be doing this triangly every day or every other day as much as possible on the episode side. And you can read through all the articles. Again, I'll have all the links in the description box. Have a great and safe day. Cheers. Ciao. And I'll be trying to keep these at 15 to 30 minutes, maybe 45 minutes at most if we do some discussion. And chat with me. Leave your comments in the description on what your thoughts are about all of these articles, and I'll respond accordingly.